Hello traders and welcome back to another video of Nova Forex. The smart money, which is big banks and financial institutions, manipulates the price in order to trap the retail traders, as the retail traders use only one time frame in order to take entry or exit from the market. So, this video would be a complete guide on the multi-time frame analysis. But before we start the video, make sure that you subscribe to our channel and hit this bell icon as we upload new and effective smart money trading videos every week. Now, before we move to the strategy of the multi-time frame analysis, let us first understand what is multi-time frame analysis. The multi-time frame analysis simply means the analysis of the market on different time frames, which are done in order to make up a profitable trade into the market. Now let us understand that why should we use multi-time frame analysis instead of one-time frame analysis. The first reason is that the multi-time frame analysis helps us in knowing the trend of the market. Let us understand this with an example. So, here we have the Euro-Canadian dollar chart on 5-minute time frame. Can you identify the overall trend of the market? Now let us see this chart on hourly time frame. So, as we can see here, that the market is making higher highs and higher lows, which is why we can say that the market is in an uptrend. And because of this consolidation phase, we could not identify the overall trend on the lower time frame, which is 5-minute time frame. And which is why I recommend you to use the multi-time frame analysis, as by using it we can easily know that whether to take buy trade or to take short trade into the market, and which is why it would help us in saving our capital. The second reason is that the market has the tendency to respect the supply and demand zones of the higher time frame rather than of the lower time frame. Let us understand this with an example. So, here we have the Euro-New Zealand dollar chart on 15-minute time frame. So, as you can see here, that the market is doing the break of structure to the downside, which indicates that the market is in a downtrend. We can see that the market is moving downside after reaching to this zone, which is why we can say that this is a resistance zone, as it has provided resistance to the price 2 times before. And which is why there is a higher probability that the price would go downwards after reaching to the zone 3rd time. Now let us see what would happen if we would initiate our short trade from this point. So, as you can see here, that the price hits the stop loss and then moves upwards. Now let us see the same chart on 4-hour time frame. So, as you can see here, that the market made this liquidity zone of equal highs, which made a resistance zone in the lower time frame. The market made this pullback in order to grab the liquidity and reach again to this supply zone. This big pullback made a downtrend into the smaller time frame, which is 15-minute time frame. And thus, I recommend you to use the multi-time frame analysis instead of one-time frame analysis, as it helps you to save you from getting into these traps that are set by the smart money into the market. Now let us see one more example of it. So, here we have the Euro-Japanese Yen chart on 5-minute time frame. And as you can see here, that the market is doing the break of structure to the upside, which indicates that the market is in an uptrend. So, as you can see here, that the market has respected this zone for 2 times, and thus we can say that this is a support zone. And then we see market coming at this zone for the 3rd time. Let us see what would happen if we would initiate our buy trade from this point. And as you can see that the price hits the stop loss, and thus we would switch over to hourly time frame in order to draw the order block zone. We can see that the market made an inefficiency by creating this imbalance candle. And which is why we would draw the order block zone from the candle that formed before this imbalance candle. And thus, we would initiate our buy trade into the market from this point. And as you can see here, that we ended up making up a profitable trade into the market. The best way to use the multi-time frame analysis is by identifying the supply and demand zones on the higher time frame and then switching over to the lower time frame in order to draw the order blocks for taking entries or exit from the market. Now that we have understood the importance of using the multi-time frame analysis, let us move on to which time frames you should use in order to make up a profitable trade into the market. So, you can use the daily time frame as the higher time frame and the 1 hour time frame as lower time frame. You can also use the 4-hour time frame as higher time frame and 15-minute time frame as lower time frame. And also, you can use the 1-hour time frame as higher time frame and the 5-minute time frame as lower time frame. We would use higher time frame in order to identify the supply and demand areas into the market and then switch over to the lower time frame in order to take confirmation and entry into the market. Remember one thing, that if the time frame that you are using is not getting respected by the market, then you are using the wrong time frame. Let us see an example of it. So, as you can see that the market has made an imbalance candle and has created an inefficiency. And thus we would draw the order block zone from the previous candle that formed before the imbalance candle. The price came back to the order block zone, and thus, a lot of traders would initiate their buy trade into the market from this point, thinking that the market would go upwards after reaching to this zone. But instead the market went downwards, and thus, we can say that the market is not respecting this time frame, and which is why we should not use the time frame like this. Now that we have learned the best time frames which should be used in order to make up a profitable trade into the market, let us move on to the strategy. So, in this strategy we would use 3 time frames. We would use the bigger time frame, which is daily time frame, in order to identify the support and resistance areas into the market. And then we would use the 4-hour time frame in order to draw the order block zone into the market. And then at last we would use the 15-minute time frame for confirmation. Let us understand this strategy with an example. So, here we have the Euro-New Zealand dollar chart on daily time frame. And as you can see that the price is moving between the range of this high and this low. And thus, we would mark this levels on our chart. Now we would switch over to the 4-hour time frame in order to identify an order block zone into the market. So, as you can see here that the market is making higher highs and higher lows, and thus, we would identify the bullish order block zone into the market. We can also see market making an inefficiency, and which is why we would plot the bullish order block zone from the previous candle that formed before the imbalance candle. Now that we have drawn the bullish order block zone on our chart, let us wait for the market to reach at this zone. We can see market making the liquidity zone of trendline. And this gives us a higher probability that the price would come back to the bullish order block zone. We can see price coming back to this bullish order block zone, and thus, we would switch over to the lower time frame, which is 15-minute time frame, in order to see if the market makes a change of character or not. So, as you can see here that the market made an external change of character, and which is why we would plot the order block zone from this candle. Now let us wait for the market to come back to this lower time frame order block zone. We would initiate our buy trade from this point. We would keep our stop loss below this bullish order block and place our targets at 3:1 risk to reward ratio. And as you can see that we ended up making up a profitable trade into the market. Now let us see one more example of this multi-time frame analysis strategy. So, here we have the Euro-Australian dollar chart on daily time frame. And as you can see that the price is moving between the range of this high and this low. And thus, we would draw these zones on our chart, and then we would switch over to the 4-hour time frame in order to plot the order blocks into our chart. We can see market making lower highs and lower lows, and thus, we would identify and plot the bearish order block zone only. And then we see market creating an inefficiency, and thus, we would plot the bearish order block zone from this candle. Now we would wait for the price to come back to this bearish order block zone in order to initiate our short trade into the market. We can see market making liquidity of equal lows, and this gives us a higher probability that the price would come and tap into this bearish order block zone and then go downwards. We can see price coming back to this bearish order block zone, and thus, we would switch over to the lower time frame, which is 15-minute, in order to have change of character confirmation. We can see price making an external change of character, and thus, we would draw the order block zone from this candle that created inefficiency. Now we would initiate our short trade once the price reaches back to this bearish order block zone. We would initiate our short trade from this point. We would place our stop loss above this order block zone and keep our targets at 3:1 risk to reward ratio. Remember one thing, that you should always place your stop loss above or below the bearish or bullish order block zone, as the market has the tendency to remove the stop loss of the early buyers or sellers and then continue its trend. We made a nice 3:1 risk to reward ratio through this trade. This brings us to the end of this video. So, in this video we shared the best multi-time frame analysis strategy that you can use in order to make up a profitable trade into the market. But I recommend you to backtest this strategy before using it into the real market. But before we end this video, if you found this video interesting, then make sure that you like this video and don't forget to subscribe to our channel and hit this bell icon, as we upload new and effective smart money trading videos every week.